What's up, everybody? Let me just make some adjustments. How is the background noise? Ambient, light. Just give me a quick sound check. Good morning, happy weekend. Happy Monday. I hope you had a good weekend. That's what I meant to say. Skipped a few words. Something buzzing. Small buzzing noise. Let me see if I could turn down the gain, maybe. I don't know. I'll figure that out. Otherwise, besides the small buzzing, is the sound relatively clear? We could deal with a little buzzing. Buzzing, not that bad. Okay. Something I'll figure out after. All right. Good morning. Good evening. Good afternoon. Wherever you are. Welcome to the stream. It is Monday. Half an hour after cash sessions opened. Looks like we retraced a little bit of the gap from the S&P's close. We opened higher, obviously, because where futures are, but we retraced a little bit into the gap and then have reversed and are now pushing upward. So rates are down, dollars down, risk is up, hence my tweet. Looks like it might be constructive for risk. Anyway, before we get started, remember, none of this is financial advice, strictly for entertainment purposes only. If you're not subscribed, hit the subscribe button, hit the like button. This is a new channel. I am on here frequently, so 2 streams a week at a minimum. I've been up for a long time today already. Had to take my dog to the vet because she's getting spayed. So I've had a couple cups of coffee, my athletic greens. Should be good to go. Again, subscribe, like, all that jazz. Reminder, NFA, right? Not financial advice. And this stream is also brought to us by, hold on, let me switch something up real quick. Brought to you by Phemex. So the link is below, right? If you want to sign up to the exchange. I was not quite sure exactly what promotion was attached to this link, but there's a $3,300 sign up bonus. So if you use the link below, tradephemex.com, there's another one below that says /Clark. You will get a $3,300 or $3,200 sign up bonus. You qualify for that. And then they're running more promotions right now than any other exchange. So I think it's a phenomenal exchange. We've been partners with them. Rager's been partners with them. We've been partners with them for as long as they've been around now. Trustworthy, phenomenal execution, all the pairs that you want to trade, futures, spot. And they also now have prediction markets. So I think the prediction markets thing is really cool because it's a lot more binary than trading. But if you're interested in that, use the link below. No peer pressure. Use any exchange that you want to use. Right. All right. So again, for anyone who's just joining, good morning, good evening, good afternoon, wherever you are. Before we get into it, let's take some chart requests. I spent a lot of time on my streams. I spent a lot of time on my streams rambling, right? I focus on BTC and we touch on ETH, but I don't go into alt a lot or frequently. And that's because I don't trade them that much. I skate where the puck is going, wherever the market is showing interest, where volumes are, where attention is, that's where I am. And, it kind of goes without saying that right now the markets are depressed. Bitcoin and ETH are the most popular rides in the park right now, and they're just moving in relation to equity indices. So there's not a whole lot of excitement that's taking place from like a fragmented standpoint where there's any kind of major narratives to take advantage of besides like the overall situation we're in, which just everything is one trade right now with rates. But I do want to take chart requests. So give me your charts and we'll add them to this list. I'm not going to take all of them. I want to get inundated with alts because I'll be honest with you right now, before even charting them, I'm going to tell you that most of them are probably all in the same position. SNX, Matic, Badger, how about that? Luna Classic. How about charting Credit Suisse? Yeah, what do you guys want to talk about? Do you want to talk about nuclear war? Or that was so yesterday, right? Forget nuclear war. We moved on to Credit Suisse. Man, if this isn't a bottom, I mean, listen, I made it clear the other day, I don't know what's going to happen. I have stood by what I've said now for the last few months, that I think we're in the process of bottoming, and that we, I guess as specific as I got was that we would get the bottom tick in Q4. And I went into detail about how the S&P, how I thought it was bottoming or had bottomed, but it didn't mean that we couldn't sweep the low, and that zone was more important than anything else. And we're holding the zone, but the market is certainly giving us a lot of reason to worry. There's something new every week, and I play very defensively. So, when I see things start to look slippery, that's when I start hedging. That's when I start reconsidering whether or not I really want to hold on to any kind of opinions like it means much. But I think that opening up TRX, I think today is pretty significant. The fact that we could sort of survive over the weekend, come into today, and if we see positive behavior across the board for risk today, early in the week, I think that's a good sign. October, beginning of the week, beginning of October, historically a little bit of chop, but from October on to the end of the year has previously been a time for good performance within markets. Obviously, we're in a completely different context now, but September ended up behaving as Septembers do, regardless of any specifics. So I'm remaining optimistic. The more that we have thrown at the market, right, the more you should expect that the market should move lower if we're really in that bad of a position. And instead, it seems like it's doing a pretty decent job of weathering whatever storm or kitchen sink is thrown at it. So what else we got? QNT. One other thing to consider is we are going into the end of the year. All right, Q4. Consider this for yourself. Consider this for larger entities within the market. Tax loss harvesting. So this is the time when individuals like yourself, right, asset managers, large money managers, individual traders across the board, this is the time to mark losses against the book, to tax harvest, right? And it's possible that you could see a lot of selling coming in, right? This kind of choppy behavior because of that, right? Selling as late into the end of the year to realize those losses, to be able to, harvest them, or harvest those losses rather, and then reaccumulate those positions. Obviously, there's a difference between stocks and the wash rule, and how long you can, the amount of time that needs to pass before you get back into position. But there's ways to get around, or to sort of get around that, and in a lot of ways that relies on like getting into pairs that are heavily correlated with pairs that you're selling to tax loss harvest. But anyhow, just a thought. Chamath had mentioned that a lot of people have pretty strong opinions by Chamath, but I think it's a good point worth mentioning. What else we have? So QNT, and then I'll take let's see, Link. All right, and then that's it, and then we'll get into it. I'm not going to go into really the high time frame right now. I mean, it should be kind of obvious where we sit. I'm not going to, I see people always constantly talking about the same thing, like volumes, spot volumes and futures volumes, and how they're dropping. And it's like, yeah, well, volume's going to come back when it comes back. It'll show up when it needs to. Like, it's pretty damn obvious right now where the market is. Like, it's gotten its ass kicked. We're not in a bull market. We're in a bear market. And it is what it is. We'll see volumes come back when it's going to be obvious. Like, you're not going to need to worry about the volume, across exchanges and spot markets versus derivative markets. You're going to be focused on prices ripping upward. All right. So I have 2 screens set up. Just a real quick aside. I have pretty comprehensive performance metrics for my own trading, and Monday happens to be, and that's why I normally stream on Tuesdays and Thursdays. Monday happens to be the day that I trade least, next to Saturday. So Saturday I almost never trade. I haven't traded much over the weekends this last month. I had a phenomenal month. But Saturdays and then Mondays are my lightest days. So my heaviest days are actually Tuesday, Wednesday, and Friday. These are important things to know, because not only do I know, well, obviously, that's not something hard to figure out. Hey, when do you trade the most? You could do that manually and figure out by just looking at a calendar and your trade history. But it's important to have an understanding of hey, when do you trade well also? So my trading behavior, my trading activity frequency, it's part of it is obviously the amount of activity, right? If there's nothing going on, I'm not going to trade. And if there's consistently enough going on Saturdays, well, then I'm taking my Saturday off, right? But another reason why you might not, or you might see that, well, you obviously should. The more important reason to not trade on certain days is if you see that those days that you trade poorly. So having a breakdown and understanding of time of day, day of week, this can be very important. I just happen to be inactive on Mondays. I think it's I'm always excited to come back on Monday and get back into things. It's just force a habit from coming from trading stocks and at the beginning. Focusing on a lot of single name stocks, trading cash session. Monday's it's back to work. It's a back to work kind of feeling, but ultimately I arrive on Monday. I'm excited, but then it's just, for me, it's not a very active day. It is what it is. Anyway, so got a few pairs. We're going to take a look at BTC. I mean, first thing we'll look at is the ES, and I have a screen set up. This is what I was getting to just a second ago. And that's why I tied in the, I'm going to leave this up, right? So I have the DOM right here. I have this portion. This is on the DOM, but I've really blown it up for the sake of the stream. And then we have tapes. So just real quick, I probably say real quick a lot, and then it ends up dragging on. But I went back to AgriTrade because I was using CryptoWatch for a while. CryptoWatch is this amazing platform, and they have a ton of things coming out that Actually, Nomad made me privy to a while back. I don't want to spoil that because I don't want him to, think that he tells me something and then I just go leak it. They have a bunch of stuff coming down the pipeline. It's a phenomenal platform, and it doesn't use basically any of your compute power. Like, you could run this thing, screen's full, and there's nothing really that even comes close to it. This doesn't really take up any of your computer's energy. These are the tapes. So this is the FTX derivatives tape for BTC, and this is the Binance Perps tape. I was back at Agar, right? Because I thought it was nice to have the sound. If you're not looking at the screen, if you step out of the room, having that kind of, everyone knows the aggr.trade website and the noise that kind of comes along with that tape. It's like this pinging noise. And it's nice to have that, sort of audible cue that can, if you're looking at a bunch of screen real estate, you don't have to focus on the tape. You could just kind of hear the tape, and then you could start setting sounds and tones based on, the spot tape versus the perp tape. There's a certain degree of customization that could take place where you could begin to kind of tool it and make it more useful to your trading. For me, the sound was, okay, now I have to actually start paying attention to it. All right, sound's picking up. Or, again, you step out of the room. Instead of having like a buy price alert or buy price level alert, like prices crossing 37.10, you just pick up on the sort of crescendo of orders coming through the tape. I enjoyed that for like a day, and then I just turned it off. And I've gone back to Crypto Watch's tape because I know that they have sound coming out, and they have a lot more customizable sounds, or it allows for a lot more customization. And I don't know, the aesthetic to me is a little bit more attractive. And I'm only really focused on Binance anyway, but I have the FTX tape up also. I have them separated by lot sizes. So this is just a unfiltered tape right here. And then you can't see off screen, I have two portions that are filtered only for large lots. So I could see, okay, we're getting some size coming through versus like we just have more odd lots trading. Anything pops up, we will address it here. I don't have any of my sizes set up. Now I do. But let's go to the other screen. All right. So the S&P is the most important indicator on the chart, or I think the S&P is the most important indicator that you can have on your chart. Correlation is still as positive as it gets. Right? There's brief periods where on the low time frames it's not as obvious, but for major market movements we're there, right? We're as correlated as it gets with again, this is the S&P, right? But I chart the E-mini. So we are, it's an extremely positive correlation. Bitcoin has been outperforming for the last couple months. So if you look at like the last 2-3 months, Bitcoin has performed better than everyone else besides ETH. And that's with respect to legacy markets. So you probably don't realize that because everything is just so depressed and depressing. But Bitcoin and ETH have actually given some attractive returns. I should say that they haven't given any returns, but they have had less downside capture than equity indices, right? So your benchmarks that things are going to be judged against for relative returns, relative performance. So that's great. The thing is, like I've said, I made this clear in the last few streams. Any larger move the S&P is going to put in, any, like, we'll say, what's the best way to put it? Like primary leg, like primary trend. Like okay, so this is a daily candle, but all this stuff takes place intraday. It's not what I'm talking about. Any primary move, whether we get a move back to, right around 39 or 42, where we have a break lower and we have a much larger expansion lower, you're going to see Bitcoin immediately catch up to any kind of downside move. I don't think that Bitcoin would, I should rephrase that. If the S&P was to lose this low and break down much further, to 34 to 32, the next major structural level, that outperformance by BTC, I don't think it remains. I don't think it'll persist. So if you have a 5% move down in the S&P, usually you get like at a minimum, this is being really generous, or courteous, I should say. You'll get at a minimum a 2x move in BTC. So think about it like this: 5% drop in BTC or S&P, you're looking at least a 10% drop in BTC. All right, 5% move in the S&P is a big move. It obviously matters over what span of time that takes place. If that takes place over 20 days, it's different than if that takes place over 20 minutes. But multi-sigma moves in the S&P, things that would probably happen in terms of intensity if this low is lost. So if this low ends up being lost and we battle it out around here and then we end up resolving downward, that's probably going to be a pretty nasty move. If that happens, Bitcoin is going to capture more downside. ETH's going to capture more downside. That beta is going to be, it's going to assume its normal relationship. It's not going to be, behaving as it is right now when things are, they're shitty, but they're relatively calm. But as I started the stream, in the face of everything that is happening, we're not going to talk about Credit Suisse. We're not going to talk about, Putin or anything like that. In the face of all that, though, there's plenty of reasons for this market to ultimately sell off, right? Bad news after bad news after bad news. And yet the market it's not necessarily having an easy time making new progress downward. What it is doing, it's moving still within a much larger range. So there's very large moves that we could take advantage of that are sort of trend-like, but all in all, the market it's stuck in a range. Now, if you look on like high time frame and you look at, momentum oscillators, things are very oversold as well. So I still think that, the market is in the process of bottoming. And if I'm leaning more confidently on one side or the other, it's that the market is putting in a bottom. All right. I will completely change my mind if we are unable to reclaim this level and, re-accept back within this is 1 quarter, 2 quarters, 2 quarters of value overlap. So hopefully you could see it on your screen, but I have some quarterly profiles here, and the last 2 quarters, you're looking at right between like 37.50 and 42.70 roughly of our value area high and value area low of this entire range. So not a whole lot has changed. We just attacked the low again and we've reclaimed the low, and this is your, weekly level. That's weekly. That's your daily. Daily lowest close was 36.69. We're tapping on that right now. And again, we have every reason to see markets continue to move lower if it was just a sentiment thing alone. So this is good. I think this is constructive. And I think that the fact that we see the dollar is it's 111 now. Rates are down. The dollar's down 39 basis points. The 2 years down, 4.8, 10 years down 5.2. That's good. Again, just to reiterate, the reason why we're talking about this for anyone who's new and just tagging on is that this is the leading indicator for BTC. If the S&P is in a free-for-all downward, risk is too. If the S&P finds support here, there's more of a case for Bitcoin and crypto bottoming as well. I don't think it means you just start spreading, your seeds all across your seeds. I don't want to say it like that. I don't think it means you start redeploying everywhere within crypto. I think that it means that you focus more on BTC and ETH. Is that clear? Give the chat a second to catch up. Now, if this low was broken, you'd probably see a lot of systematic selling coming into the market. If we're able to bottom out around here, the same behavior that we see on the way down to the upside and to the downside, those trend following CTA entities, the same systematic buying and selling will start triggering back to the upside. And the selling pressure that comes in, again, systematically, will be alleviated, and this market will have not much trouble moving back towards the midpoint of this range and the high of this range ultimately. If we're able to base out around 37, it's unlikely that I think that if we're able to accept back within this low, so we'll say like 37.20. So you have like this pivot that took place over the last week. high time frame, range low, range high region, value area high, value area low. I think that ultimately if we start basing out above 3750, that we're looking at, again, just a much longer range being put in. And I wouldn't anticipate that you get some kind of failure of a lower high here that continues down. I think this is the bull's chance, especially on the back of what seems like more uncertainty, especially with the Credit Suisse debacle. So this is good. As I said, this is constructive. Is there a lag in the chat? Let me just double check. I have the chat on different screen as well. No, we're good. All right, so let's take a look at BTC. We're going to go to Sierra chart because I'm back to using Sierra chart. I don't think there's anything else I wanted to touch on. Is this chat caught up as well? All right, so they're both synced. Sometimes the chats are out of sync and I'm missing something. All right, weekly TPO. These are our weekly distributions, right? So we have basically, this is as close to an inside week, right? We have extremely balanced back-to-back weeks. So this is pretty clean in terms of where our value is the last 2 weeks. And you're going to see that when we look on the daily TPO, this is a very clean range that we've been trading within. So before we had this spike up, one sec. So again, I'm getting better at remembering how to scale Sierra because that was a pain in the ass during the last stream. Before we had this rotation higher, right? Before we had that squeeze higher, the range was compressing, a lot of value overlap, inside value. And what we've done is we've accepted back within that prior range and kind of just fallen back within the same behavior. So this is kind of, it's not the most attractive area to get involved. That's for sure, right? The last 3 days, again, tightening up. So you go from a period of like high dispersion, a lot of kinetic energy, tightening up, expansion, kinetic energy, back to potential energy, tightening up. And you can see in just the last 2 days range, I mean, it was a weekend, but completely dropped off. We're like 1,500 point range, 1,300 point range, 800, 1,100, 300, 400, and today we're at a 594 point range. So really tightening up. All of this entire structure, if we look on the daily, we'll put the weekly back on first. So more explosive bounce, now more of a rounding bottom. Again, last 3 weeks, 2 weeks that have printed, but third week in the making, very balanced. I want to put on just some lines real quick, just to show you how things are actually compressing locally. And you'll see the benefit of Sierra is these drawing tools will tag onto the main. Like this is the weekly, but here's our daily. Just get that a little bit tighter. Oh, that did not, I don't know why that connected. Oh, okay, so backing up, that's why. So downward progress getting cut off, very clear point, more locally sort of the same thing between this and this. So I'm just trying to, I don't really rely on, you guys have seen me share charts long enough. I don't really rely on diagonals. You're going to break them through the passage of time alone. Like, if you have a running diagonal support or resistance, if price just moves sideways, it's going to break at some point. And that means that there has been a change though, right? Like this has been the rate of acceleration downward. If you're breaking that, moving sideways, well, it means that momentum is slowed to the downside. So you could kind of see shifts in momentum through this, but if anything, what you're seeing that's more clear is than anything else is just the tightening. So if I'm going to give some kind of trigger, it would be that, just get rid of these chart drawings. It probably would be a breakout of the last 3 weeks value. So let me add these. There you go. So around 19.6 and 18.7. It's actually tighter than that. So it's actually around 19.5, right? So 19,515 and 18,810. And again, that is, you can see how much time we've actually spent in that structure, going back even further than the last 2 weeks. If we break outside of, if we start trading back above the last 2 days, back around again, I would say like 19.6 is probably a better trigger, so you're not getting caught on just a fake out above the last 2 days high. Then I think that this is going to put in a much larger leg. This was this low volume area was cleaned up. So we talk about that all the way back down here, accepting back within this low volume region. Usually you're going to see that historically in the last year, every time that we've traded back within like a double distribution structure on the way down that was created on the way down, that we filled it out. Like, once you start accepting into this low volume region, as I've said many times before, there's a lot of untested positioning there. There's not a whole lot that stands in the way between like your thin point to your thin extreme before it begins to pick up again, right? So this was not a gap necessarily. Like if we zoom in, hold on, how do we zoom? See, not exactly there with the hotkeys yet. With back, not exactly back to where I used to be with the hotkeys on Sierra. This is not exactly a gap. You have, these aren't single prints, right? You have two columns here. No single prints within this entire structure, but it is an entire low volume node, right? So it was way more efficient than a pure double distribution, right? So a pure double distribution would have been, your two higher volume regions of balance or areas where value had been established, separated by one string of TPOs, right? So it would be a bunch of this separating two areas where, wide chasm between two areas where value had been established briefly. So even though we covered that, like this would be the first time that we have, that Control F button pulls up that stupid GAN, that whatever that's called, a GAN fan or whatever it is. It's stupid. This would be the first time that we would have traded back within, go back to the daily, traded back within a low volume region. What's going on? Hold on, wait, there we go. No, actually, so that's locally. If we trade back above 19.6, there's not a whole lot. This is what I'm thinking of. That's why it's confusing. Switching between the TPOs and seeing them undone and then going back to the daily candles. There would probably not be a whole lot that would stand in the way of us all the way back up here in this gap. So that's much further back. So that goes back to, that's between, yeah, so that's higher than this. Sorry guys, I'm getting confused by where I am on this. Scaling is this is a bitch. See, there we go again. My hotkeys now are, this is a pain in the ass. Let me just draw it right here. 19.6, reclaiming that level. I think even though this gap, this is what I meant to say. Even though I meant this had been cleaned up right here, I think that returning to this level, since we've usually seen that you get something like this and then we break down further, trading back above that 19.6 level, I think gives us a pretty easy trade back up to 20,200. And then it's this level right here. So it's 20,200 that takes us to what ultimately is the same type of gap. We have a single print further up, whereas you didn't have any here. But it's the same type of idea as what took place right here, more locally. So trading above 20,200 is probably a very quick move. Accepting back above there, not just trading, is probably a a pretty smooth ride back up to 20,200. So apologies, I was zoomed in and I'm looking at this lower time frame structure, but I know that there's a much larger gap that we have ahead of us that is taking place. Yes, that is taking place within that larger compression. So that would be, you know, the signal from that is basically we're breaking out of a local structure, you know, local value area. And then it would also be that we're, you know, kind of beginning to break out of what has been sort of this running diagonal resistance. And I don't have to use this drawing tool. I could actually use this one and then it'll show up on the other chart. Right? Why is that anchoring? See, I got some stuff I got to work on with Sierra again, but it's I think it's a superior platform. No, that's already, what's going on? Why am I on, is that the weekly? Why is this, why am I getting fucked up? Hold on. No, this is the daily. It is the daily. Oh, it's again, I'm looking at this gap thinking of how, all right. So it's right here that I'm talking about. Let's do that again. I swear, Sierra is a phenomenal platform. Oh, it's because this day's not printed. That's why. Yeah, what is going on? Why is that not, why is that leaving behind? Where is this daily structure? Oh, there we go. Sorry about that, guys. Did you just see that? What happened? Did anyone just notice that? None of those candles were there. I am looking at, see, that's, I knew that something was, you know, I don't want to call myself redacted, but I was. None of these candles, see, I'm switching between the TPO chart, trying to make sense of what I'm looking at on the TPO chart, going back to the daily structure, and meanwhile, all we saw on the daily structure was leading up to here. All right, so it makes more sense. Let's redo that the right way now. There we go. Jesus. Why didn't anyone in the chat say anything? All right. Now it's, okay. So, a couple streams from now, we'll be back to using Sierra very smoothly. So breaking out of, fuck, I just hit a hotkey again. Breaking out of 19.6, right, gives us a pretty easy trade, more than likely to 20,200 again. This should have been kind of a one and done. On the way down, as we've created these gaps and we've traded back within them, we usually clean that up and then continue to print lower. So trading back within that gap, instead of making further progress downward, it usually, I mean, to me, it would indicate the path of least resistance is upward. And then on top of that, we have this sort of running diagonal on the way down that has kind of governed the lower highs that we've put in and the sort of tip of the spear of this compression. Everyone all caught up now because that was, I don't know how that happened, but I was getting really confused and trying to act like I was keeping it together. So now it's way more obvious how compressed things are. So when it comes to compressions like this, I mean, if we're going to go, let's just say based on this, and we'll be even a little bit more loose, it's more than likely that when you have some kind of running diagonal, that you'll get short-term momentum out of this, but you'll ultimately have a retracement. So it's unlikely that you don't have a fake out. I guess that's the best way to put it. So in the short term, around these levels, so around that running diagonal, there probably will be a brief lower time frame trade to take. But on the high time frame, judging this as a true breakout, I think you would want to see ultimately some kind of pullback and retest. So whether you're using, you know, again, I don't really rely on running diagonals or diagonal support and resistance because, again, it can be broken just through time. But if you are basing your trading off of this, I would want to see some kind of daily close through the level, some kind of higher time frame hold and sold. Not just buying this, you know, what I'm trying to say is I'm not just buying this on the 5-minute, assuming that this is a, you know, much larger breakout in the making. So we're accepting above yesterday's value. So that's a good sign for expansion though. And if you combine the last 2 days, this kind of looks, I mean, if we could hold this this ledge, there goes that fucking tool again. So if we could hold 19,346, you're probably getting a move to at least that 19.6 level. Just back within this value area of that prior day before this markdown, where this low volume, not low volume area is, but to clean up the rest of that profile. So a structure that holds this level, I think, takes you to that 19.6 region. It's actually right there. And then we'll see if you could actually hold that to push up to 20,200. I just want to look at this right now on the lower time frame chart. 10-minute footprint. I usually like to look at something like a 1-3 or some kind of volume based or tick based footprint. So I talk about the concept of sold and hold a lot, right? This is kind of melting into the level right now. Usually I would want to see some kind of fast move in. So again, that's a 3-minute, 1 minute. If it's a sold and hold and it's going to be a successful retest, a lot of the times I want to see that you have sort of a brief consolidation. You get a spike of the level where you get some volume coming in, and then you're continually trading and holding the bid higher instead of like, and we could just be accumulating sellers at this level right now before squeezing up. But I would want to see that we're able to move again. Imagine like breaking above 19.4 from here, 19.440, seeing the same selling coming in, but now price beginning to hold higher. Whereas now we broke above the level. Selling is kind of keeping us around the level. There's not a whole lot of buyer aggression that's taking us out of here. I mean, the level's being sold, right? If you look at the higher time frame footprint, the level is being sold, but I might end up buying this anyway. All right, I just tagged one on. It'll highlight my average price. My average price is 19,423. And ultimately, if we start trading back below that level and we're just falling back within the last 2 days value, then I'll just cut it. See, this is semi-constructive right here. This presence above this ledge. So see this little anomaly right here? It's not a very even portion of the distribution. If we open this up, you see that that is from this little low volume area that was on Saturday. But today, on Monday, now we're trading above the weekend's value. As long as we hold that, I'll hang on to this little long. Because it kind of does look like we're flagging at the level. Where's the, hold on one sec. What do I want now? I want the tick chart. That's why, excuse me. Yeah, you have absorption that's taking place. Just buyers are not ripping this thing out yet. So if we just look at the slightly higher lows, but CVD right now trending down, I would ultimately want to see, I mean, I got in a little early. Might be better to get in right at a break of these local highs. And then at least you have like a, You're probably going to stab at this high again at a minimum. Okay, now I'm in profit. Net of fees. Let me just look at the chat real quick. I didn't think I would be taking a trade during a Monday stream, but I had it up just in case. Just to reiterate, not the most attractive selling at the level, but we do see when you look at the CVD, it's a little bit more clear. If this level is going to hold, that's it. It just has to hold. I would get out of the position if we were trading back within the last 2-day value, so weekend value. So now we have this nice little floating that's taking place right now where the market is actually holding slightly higher. So selling coming in. Ultimately, what you want to see is this red continue to persist upward, right? And what that means is if you start seeing this continue upward and volume is, let's say you have, ideally you would have higher volume, so more selling coming in, but price moving higher. That's kind of like a rotation-based example of absorption, right? So more selling coming in, yet price is able to be, remain bid even higher than previously where the levels were sold. Versus, very simple concept, versus selling coming in and just continue to mark price down. All right, so let's take a look at some alts. I'll leave this on. I'll scrap it if we ended up breaking. Like I said, if we end up breaking back within this structure, I'll just scrap the trade. And 1 second, I could actually, hold on. I want to show you because you probably, I don't think you could see the DOM when I clicked market in, but 1 second. Here you go. So this is my entry right here. And then I will place a stop order. It's actually not showing up on the chart right now. But my stop is, let me scroll this down. Is at 19,335. So it won't be much of a loss. But this is my entry. And I mean, if we trade back down slightly and we see the same selling coming in, I will just use that opportunity. If we see the same selling coming in and we maintain holding it, I'll use that opportunity to tag a little bit more on. All right, but stops in place. Position has now gone back. It's gross P&L is positive, but I just paid a fee to ape in. All right, let's get out of here. Take a look at BTC. High time frame's done. I mean, excuse me, not BTC. Let's take a look at those alts. So a ton of compression. The trade, though, is just a local acceptance above prior value. So it might be a little clearer on this because you guys are not all familiar with Sierra. But you see, no, it's not even that clean on this either because I have a dark theme. If you just look at market structure, though, this is a decent sign of acceptance above this prior consolidation with not much ahead if we continue to push up. And then you have sort of another diagonal trigger right there that might offer us some more buyers to get behind some kind of momentum, but we'll see. All right, so let's take a look at some alts. I like to execute through the DOM. That's why I use the DOM most of my entire trading career. The only time I wasn't really worried about using a DOM was when I was trend following crypto. But at the time actively trading crude oil and using the DOM. So now that I'm very active in trading BTC and crypto the same way that I was trading legacy, it's just more comfortable to use tools that I was, familiar with. All right, so alts. Set up the chart a certain way. One hour. $12 hours, fine. Make sure these are linked. Symbol. Cool. So ETH. We'll go over ETH real quick. I don't get too excited about ETH. Like I said, the merge was like it was as it always almost is. It's almost always buy the rumor, sell the news. Like there's cases in crypto where it isn't, where the market is still very inefficient and it's not fully realized yet in the price. But in a bear market, you could almost always assume that the market is looking for any reason to. The market is looking for anything that'll offer any kind of relief. So very unlikely that some kind of fundamental catalyst for any individual pair is going to take it out of what is a larger bear market for all markets. But ETH was structurally, all markets are trading very technically, which is great, even the S&P. ETH was at a better area in market structure, but it also had a larger move up. So ETH's daily, weekly consolidation a lot cleaner. And as I said, this is now a couple streams because it's been here for a while. You don't want to see it consolidate at a level, but as long as this level holds, this is a reasonable area to expect that support would form, right? Very clean consolidation. But now we have a very clean structure forming on the top of that consolidation. I don't really like that. I like that, again, we're not in a really fast-moving market. Fast-moving market, you would see the level gets, you'd probably have something more along the lines of this and then a recovery versus, this was the optimal response right there. And now we've just traded inside of those, inside of that daily candle, almost the entirety of the structure. So a lot of overlap that's taking place, which could be perceived as sort of consolidation against support, which is never a good sign. Usually you want to see that the market is very responsive. If something is, if something's on sale, we should see the market jumps at it. But nevertheless, we're holding the level. If we accept it back within this consolidation, that's a really easy range to trade. It's like 12, 1230, whatever this low is. Trading back below there probably leads to an expansion of at least, 1K, right? 1060. The lows of this range. This is, basically a value area low, value area high of a prior multi-week composite back here. So holding the level, again, it's not that exciting. It's not like a compelling response. We've had a compelling response much earlier, but now we are one inside week that's already been printed, right? So you have an inside week structure. If we break below, honestly, that 1247 level, that inside week structure is in play. So that's kind of a trigger right there, actually. Probably a pretty responsive trigger. So if we break below 1247, the point is it's kind of right around last week's low, and we do have an inside week. This week entirely inside of the prior. Looking at this more in the daily, this clean consolidation, all right, has two. There's confluence at the lows between a trigger for a breakdown and breakout, and the high is more like, it's probably clean around 1338. So the inside break high would be around 1398. But my point is, if we were to look at this from like a composite standpoint, it is right there. It's right around 1350. So what I say, 1338. So trading above, it makes sense to think about it also. If this area, 1350 region, is where we rolled, right? A lot of compression, price rolled off of it. If we're trading back above 1350, well, at a minimum, you're attacking this high right around 1415. But at that point, it's the same kind of thing with BTC, and BTC would kind of be doing the same thing on its own, right? That we were talking about earlier before I realized that the days were all fucked up. Where if we break out of this consolidation upward above 1415, that region, just think about where this pivot is. If we're holding this level, there's not a whole lot that stands in the way of us. You know, you put in these one-sided moves on the way down, consolidate. Well, if that's not going to lead to another one-sided move on the way down, if you re-accept back within that region, there's not a whole lot that is cause for friction. So high time frame wise, this is giving a decent trigger setup because this consolidation is so tight. Again, just to reiterate, inside week, even though I think a trigger for a play higher is closer to us than the actual high of the prior week, but the inside week trigger at the downside is right here, which also lines up with this prior consolidation high. So there's a bunch of confluence right here as to why you should be out if we accept below there. But it is clean enough to give us that same high setup as well. So support above 1350, you know, maybe you have this diagonal resistance right around 15 something, but should be a pretty one-sided move there. And then maybe you put in a lower high, but at least, you know, you have a decent tradable opportunity. And you can see where we're kind of knocking on right now. It was like we had 3 days of value established, chance to rotate lower, did not rotate towards that low in its entirety. Now kind of accepting back within that value region. If we don't, you know, this could possibly squeeze up right here to 1340 and then rotate down. I'd rather wait for 1350 with this, because then it's clear you had this kind of under over structure. And then attacking this high is kind of something I think you could take for granted. So 1350 to, you know, what was it? I say 1415, 1400. Just give me 1 sec, guys. I have to actually use the men's room. I have to pee. You could say pee on YouTube, right? All right, we're back. All right, so I think ETH is pretty straightforward. ETH is kind of same situation that BTC is, as it usually is, absent any kind of major catalyst. All right. How's my Bitcoin trade doing right now? Flagging at the level, which is not bad. You can see that it kind of looks like right now you had absorption at the low, but for the buyers that have just come in, it looks like there's a little battle taking place right now. So it's not as one-sided, and this kind of further speaks to how I was talking about it kind of hesitantly in the beginning of the setup, because you would normally want to see like this happen, and then we're up and floating already. Versus this is kind of taking time at the level. You know, if the level is important, then people are going to show that it's important based on how they act when things change, right? Like if there's a level that's clear, it stands out, and it's like a level that should be very decisive, or deciding in terms of where price should be next. If you break through the level and you get like a weird muted response, well, maybe your premise is wrong, right? Maybe it's not that significant. So we're just holding yesterday's high. Again, it is 2 days value prior to that, but it was a weekend composite, so it's not like it's that significant. But I'll leave the trade on. If I get stopped out with a hard stop on that, that's fine. It would be where I would invalidate the trade anyway. And I want to give this some breathing room. Crude oil's down. The dollar is still down. But the S&P is kind of rolling a little bit as well on the low time frames, the same way that BTC is. But we'll give this a little breathing room. All right, let's take a look at some alts. What do we have? SNX. Let's put some levels on this first. Everything is doing the same thing. I mean, I hate to keep saying that because it probably sounds repetitive, but it's the truth. It's like, hey, man, we were here. If anyone was here now, multiple cycles, this is not as bad as 2018 is. Like that was a period of, it was like 2 months of like no movement. But it all becomes one trade again. Like there is some fragmentation that is taking place in crypto. As the market's maturing, things are gaining more legs on their own rather than, it being as obvious as it's only BTC. And if it's not BTC, then it's not going to be good for anything else. And I should clarify, if Bitcoin is in a bear market in the past, like there was not much idiosyncratic performance. Whereas now it seems like this cycle there's a few narratives. Who knows where we are at though in the bear market. We could be 6 months from now and there could be nothing going on. But you'd expect as the market matures, like single name attention becomes more worthwhile outside of like, all right, either crypto market's good or it's bad as a whole. But Bitcoin, ETH, majors right now, they all kind of are in the same position. High time frame wise, range lows for SNX. You can see where it kind of rolled off of on the way down for this weekly structure. So resistance acting like resistance. Still and the reason why I kind of repeat very simple things like that, like one sec, where's the box? Just to reiterate like basic trend stuff, right? This is series of lower highs on the weekly time frame. Like that's as far as high time frame structures. I don't really pay too much attention to the monthlies in crypto. Weekly is very significant though. Changes through the weekly, lack of change through the weekly. So it's still very much in a strong downtrend, but we are back at the first major pivot of this entire range, right? We're saying that it is going to be a range by saying that this is the first pivot, but it is, from a contextual standpoint, the best place to put on some kind of long positioning if you were looking to. Like from a risk reward standpoint, that's not the low, right? But where we had the most activity overall, we're right down there. Again, this behavior is not like very responsive. So if you look at the low time frame chart on the right, imagine that happened on the daily at this level, right? Sort of like what happened down here. That's way different than approaching a high time frame level and seeing this kind of flaggy consolidation. Usually these things might have a false break up, but then break down further. So it's not like I could look at SNX right now and say that it looks like anything that's attractive. I mean, are there any local days, inside day structures? No. So for alts, since they are pretty decent in terms of momentum, I would want to see that like this downward progress is lost, right? So if this is a consolidation and we're putting in a series of lower highs and just kind of hanging out at the same support, if we break through this series of lower highs, well, then maybe we have some momentum come in behind a move. As it is right now, I don't really like to get involved for structures that look like this, where they're just kind of consolidating as the rest of the market is, in kind of an iffy spot too. If anything, the trade for alts is low time frame intraday stuff. So I know most people ask about alts and don't care about trading intraday. So like that's my first go-to. But the intraday stuff is probably still good, right? Like here is yesterday's structure. If you're trading intraday and you're not really, you have obviously your contextual levels from the high time frame on the chart, but I'm really only focused on, let's say, what happens here, right? So Dalton setup is actionable. So Dalton setup is, here's your value of the prior day, right? Market moves sideways, brief range, brief consolidation, brief bracket, expanded lower, no continuation. The rotation higher today off the open, so this is today's open, the rotation higher found resistance at the underside of yesterday's structure, at yesterday's value area low, right? Consolidated against that area before flipping and turning that as support into support. Now, acceptance back in a prior day's value area low or value area high, from depending on the direction, if that day was somewhat balanced. So it opened up, balanced out, and spiked down into the close. If you accept back within that value area, and you see signs of absorption, holding it, right? A lot of times that's going to offer a pretty good intraday play to the other extreme. So the other extreme being this line, which might be too faint, the underlying line right here. But that's a Dalton setup, right, for an alt. So held multiple times. You could place a stop, let's say, 2 30-minute ATRs outside of the low, and then you're holding to the range high, not the range high, the value area high. So intraday trading alts, as long as they're liquid, plenty of technical setups to be made. From high time frame, I don't know. Do you know anything about SNX that makes it compelling to start building a position here before doing the same for BTC, or making a bottoming call on equities? Like the further out you go in alts, the more confident you have to be in the market. And I just don't think it's a market right now where you could be too confident outside of just focusing on equity benchmarks and how BTC and ETH relate to them. And then if you're lucky, that trickles over into alts. All right, so my long is looking good now in BTC. So let's actually see what that looks like. If we have any selling coming in that's holding. No, it's just buyers kind of lifting it out of here. So ideally what happens here, just to give you kind of an example of what you would want to see, you had a bunch of selling coming in lower. Ideally you have selling that comes in, and now the bid is going to remain. So, if you had 10 million contracts sold down here and it pulled price from, 420 to 400. Well, if now you see on the way up, you have 10 million sold, 15 million sold, we're looking at red, and price is holding this level. Well, then you're getting an idea of there's like some kind of shift in control taking place. Again, this is not on its own right now. Like everything, we're trading Bitcoin, but we're trading the S&P, right? The S&P is doing the same thing. So they're all doing the same thing. So that's why when I'm going over alts, I'm just reminding you that there's nothing that on its own is doing anything different than anyone else. Just varying degrees of beta, right? So Matic. High time frame structure. Weekly. Just to try to encapsulate this range. There we go. Just rough area. Not too worried about the precision of it. Let me zoom in. There we go. So Matic had a really nice response at the bottom, right? Really nice response at the bottom. Rotated higher into this gap that we created on the way down, kind of close to the next sticky area, which would be the underside of this structure. right? This consolidation we put in, past region didn't do much as support. Where we saw a significant response in that high time frame structure, this is going back months, obviously. Kind of a similar situation to ETH right now. Like I said, it's all the same. Similar situation to ETH. Technically clean, right? This flag breaks down, retests that level as resistance, breaks through, retests the top side of it as support. So technically it's clean. And now you just have this kind of stepping progress on the way down. So I don't know, ideally for Matic, you're able to find support back within prior lows, which is like we're on our way to somewhat being able to do that. This has been, and it's, again, same situation that ETH and BTC are in, and charts just look slightly different. Like we have this is a multi-week, hold on, multi-week range that's cleanly defined. In this case, very clean highs, right? This nice little resistance right here. Walking up some very obvious highs that would be targets on the way up in a very strong, this was a very one-sided move down. So whereas this is a lot more consolidation, this is a strong trend down off the rejection at the high. If you accept back above 80, back above these lows, you're looking at a much a wider range of play in with that probably doesn't offer too much resistance. From a technical standpoint, it's not like it's that congested. That's the best way I could put it. This is congested. This is not that congested. So like 80 up to 84, and then kind of playing it by ear. If we're able to find support back in here, tag 84, sell this level, hold that level, and then maybe tag 88. I think you still just play just these very low time frame. I can't look at something like this and not think that maybe this is just another lower high in the making on the way down. But some things are in better position than others, and it'll all be based on whether or not BTC and ETH are not crushed by the S&P. So it's all based on the S&P, right? Locally, though, again, the idea of having like complementary triggers for setups, that clean level, right? So what I'll do is I'll get rid of this because we don't really care about that wide range up there. Even though I know most people, again, I have a habit of people ask me about an alt and I look on the high time frames right away because I know most people are bag holders, and that sounds kind of fucked up, but it's true. But locally, this weekly pivot, right? Series of lower highs, lower lows in the making, and under over structure, a change in that, right? A change in the possibly change in market structure, maybe a lower high, you would want to see it develop above this prior low, right? Obviously developing above this current low, that's great, but signs of strength in the short term that are worth taking advantage of, having this weekly level, right, line up with this 4-day composite, 4-day consolidation being right here. Again, I said, what did I say, 80, because that's at least that you're not just tagging that high right here and then having something that rejects down. So watch for response at 80. If we see that we're able to gain presence above 80, somewhere up here, I would expect that, since this would be a first locally, that we would look at least, if this is all kind of like, if momentum is shifting enough for this to happen, it means that it's shifting across the board. So just keep that in mind. Like we already know this is not happening on its own. But it kind of lines up with the extreme of that other side of that, like I said, what was the word I used? Move that was, there was not much congestion in the way. So ultimately high time frame target up to 89. And then, like I said, it's not like that changes too much in the big picture. It could just be relief. So daily, we haven't even seen the daily get oversold yet. So I think it's important for you to have an oversold indicator that you look at from time to time. Like as I was saying earlier, I'll just put on my momentum template The S&P oversold, right? It was already oversold on the weekly. You have this weekly divergence in the making, but you're seeing it in the candles, right? It's not like it's not that obvious looking at just candle progress versus impulsive versus non-impulsive candles. It's like my trade is not deep in profit right now. It's in profit, but where were we? Matic. Decent. So decent breakout possibly in the making for Matic. Badger. That's a really ugly chart, dude. I mean, if I was just going to apply the same line of reasoning to Matic, to Badger, or to, if I'm going to apply the same line of reasoning to Badger as I just did Matic, weekly pivot, reclaiming that weekly pivot. It's not very, Badger's not clean. This is probably barely traded, honestly. I'm sorry, but I'm looking at, listen, I'm looking at a 30-minute chart right now, and these candles they look like this. This is a bad sign. This 30-minute candle's looking like there's no trading activity taking place, and that's on Binance. Honestly, I would not even, if you own this, set it and forget it, but if you didn't sell it already, you should have. I don't know anything about it. I don't know if there's any catalysts, if anything developed, or what am I missing? From a technical standpoint, there's nothing compelling about it other than if everything is bottoming, this is bottoming too, but there's no response off the low. All right, everyone's favorite narrative right now to short. I had said up here, if you're going to short this, just prepare to, I said something along the lines of like, hang on to the bull. When things are really obvious shorts, the whole market shows up, right? And we know how that turns out. They get very crowded. So let's look at alts on Coinalyze so we get some more of what I would look at anyway, which is funding and CVDs and open interest. For some reason, Coinalyze is acting weird this morning. If I have those on, it doesn't let me see anything. All right, so daily chart. This is on. Got to get a higher time frame chart. There we go. All right, so daily. I mean, you could see when just looking at this chart, right? So at this high, when the trade is an obvious short, like I said to everybody, the amount of open interest and involvement that is coming in after that, right? I'm sure there's something to do with the burn or whatever CZ was doing. But it's on everybody's radar that this one, you have people like GCR, who's a phenomenal trader, who has a hit rate of shorting these things down to zero that's near 100%, right? But he knows that these can take a long time. So people show up to his what might be 6 to 12 month long time horizon trade, and they have like 5-minute expectations. So a ton of involvement now. You can see funding grossly negative. We look at CVDs. Spot CVD is purple. I like to have my spot CVD white, honestly, or blue, honestly. Blue being, I don't know what I say last time, pure, and then red being evil, because perps are evil. But didn't Light just share something again about this? More of a thesis, or more strength thesis about why this is going to be going down to zero, and now you get you have a lot more people that are, again, just in the last 2 days getting involved, just looking at open interest. Yeah, I don't, you know what? I think they're right. I don't think that this thing is making it out alive. I think that there is something to be said for saying that, thinking something is probably going to go to zero or very close to it, and also being willing to say, hey, I don't really want any part of it. Like, I don't want any part of shorting it. And that's because it's a wild ride on the way down. You know, if you're shorting this and you got involved anywhere around here, you had a 70%, 75% candle in a matter of 2 hours, or in a couple hours, right? Maybe this was 5 hours, right? It's just a span of a quarter of a day. That's jump risk, man. And that's right. That's over a longer time, right? Jump risk might happen in a couple minutes. But if we break this down even to its lowest, right? That's 14%. Where's that big break? It might not allow it in. That's it right there. So one 15-minute candle alone and price jumped, had a range of 30%. So there's just a lot of hungry shorts that are trying to get in on this. And I feel like there's better trades to take where you're not locking up capital. So and one thing that I like to focus on is, so just to give you guys an idea of what you're looking at, by the way, this is funding. Now funding, you have to understand, is going to be thrown off based on liquidity also. So keeping the mark price and the index price, or keeping the derivative price and the spot price in line, is tougher when markets are thinner, right? So you have to keep context in consideration, or take context into consideration, especially when you have markets moving down, right? And people are also unloading spot, and the market can look like, you know, it could look very oversold. It could look like funding is very negative. You know, because derivatives are being sold very heavily, but spot is too. Markets are very thin. It's tough to keep those in line. You have to kind of understand new levels of norms for what is normal and what isn't, what stands out. So this is funding. This is predictive funding. So this is going to be more responsive, right? This is going to change quicker. So you'll see a shift when things like go from very negative to going towards positive again. But other things you have on this chart are the spot CVD and future CVD, but more importantly, this thing right here, this is, these are liquidations, but they're combined. So your blue are your short liquidations, your red are your long liquidations. Generally speaking, if I'm going to short, I want to see that we're I want to get involved when people are being closed out of their shorts, right? When most of the shorts have been ran. You know, there's way too much risk shorting this early. It's very clear. But if anything, I want to see that these are beginning to taper off as price moves up, and that we start to see both the futures and the spot market selling together, and open interest is closing out as well. So for anyone who was long, maybe for this move, that they're closing out, that shorts have been squeezed, and again, just a little bit more of an all clear, that it might be a decent time to short. I completely, though, write things off like this. Like I have no interest in shorting this. But if I am looking at something that is, you know, on everyone's radar and is, you know, high probability short opportunity, I'm going to be paying attention to the rate of liquidations. Like as price moves up, if we're no longer liquidating anyone, then if there's no catalyst to be long, right, we've probably put in the extent of the short squeeze and the hunt, and the market's probably going to reverse and travel back the other way. I don't think it's really important to focus on technical levels for this. This is a flow-driven trade right now, purely. So I'm not going to say like, oh, if we hold the daily level, you know, or oh, if we hit the daily or the weekly. I don't think that really means much. I think there are certain trades that become like this, that kind of, I guess, graduate to this status where I'm not really focused on market structure at all. Yeah, as we approach extremes, I would be focused to see what kind of activity we have through those extremes. But otherwise, I think this thing has, in the big picture, a one-way trip. TRX. I mean, TRX, let's see. This on the high time frame. So higher time frame chart. This is the perp chart, but if we look at the spot chart, was one of the most attractive looking charts, if I can recall correctly. Yeah, earlier on, well before all this painted. Just the idea that this consolidation, technically we were at the top side of that prior consolidation already, high time frame structure going back to 2018. Good area to buy. But this was originally, we were looking at this, I think this was earlier this year where it was still kind of like, all right, so this is the first retest of that first level. It's probably going to offer the most significant response. Just consolidating against there now, right? I mean, this is a flag on the weekly. So I guess that makes it a little bit more easy to interpret. Rather to interpret change. Not worried about getting exact points or whether it's on all tips or on closes. Just the idea is like, have I captured the behavior clear in like a clear enough manner, right? So yeah, it's obviously making slightly higher lows, big cascade down here, but other than that, forcing into this funnel. There's no major, like we've come off of being really oversold on the daily, still oversold on the weekly, but it's just oversold means that it's a strong trend. I wouldn't want any part of TRX, honestly. It's Justin Sun, like, I don't know. I feel like he might have something up his sleeve at some point. I always feel that, rather. It's a loyal fan base for sure. He's got a ton of money. But I don't know anything about what they're doing. I don't know if there's any fundamental argument. There's no fundamental argument for anything right now. So from a technical standpoint, like, major change needs to occur for this, because all it's doing is going from high volatility to low volatility and just compression from left to right. So expansion for this should be very clear. Should be either through a local high or through this low below that diagonal support. And if it does either, if this continues to accept into this wick down here, into this low volume region, well, then yeah, it's probably pretty clear that it's coming back down towards this consolidation, this little meaty level right here. Other than that, I mean, if we broke up, the rest of the market is probably breaking up as well. And then, yeah, you probably have a momentum trade from, 7 cents at least up to 10 cents. From an intraday standpoint, like, has this been offering intraday setups? Probably. Locally, the levels look like they're being technically responsive. Inside day in the making. Looks like today is really tight compared to yesterday. So maybe this finishes as an inside day, and then maybe you have an even better trigger setup. Meaning yesterday's lows, yesterday's highs. Again, this would be a 4-day, 3-day, 4-day consolidation, breaking above 62, so 0.062 probably gets you to that 0.7 level. Like, this is the weekly chart, but if we look at this on the daily, and 62 is I wouldn't even be that generous, honestly. I'd say it's more like accepting above these highs around 62. Above this consolidation probably leads to a quick trade, at least up to 0.065. Just kind of playing within local structure. And maybe you have a little bit of oomph behind that move. Link. Just get a higher time frame chart. Same idea as retesting major contextual level, you know, BTC at its prior all-time high. Link at a prior, you know, this is a multi-year consolidation highs. Flagging. I mean, TA 101 would say what? Big move down, flag, usually looking at some kind of continuation play. Again, same position a lot of other things are in, where this is compressing enough to where whoever's getting involved here, you know, it's getting tight enough to the point where the trigger for either side being wrong is going to be pretty close. So for Link, just looking at weekly progress on the way down. Weekly high with a lot more involvement around this more local level. So break above, and we're not close to it, but a break above 8 leads to 880, probably leads to this high retest of these range highs. So far, this series of lower highs has been pretty clean too. I mean, I think given the nature of this structure, like this general region being respected, this progress upward, breaking outside of any of these local lows and not seeing an immediate response. If this breaks down, it's, again, everything is correlated right now. Everything is on, you know, BTC's lead. It's probably the case that other things are breaking down as well, and it's clear that this is a sell, but a trigger is probably outside of this diagonal, you know, below that 650 region. Maybe you get a retest of that, some kind of pullback, but it probably takes you back down to those lows around 5 something. This more recent weekly consolidation is pretty clean though. And I just say weekly consolidation. I'm just talking about these highs. Couple pivots in the same region. So it would signify something has changed if we're able to stay above that 8 level for any material amount of time. Like you'd see we held it, cut through it, spike above, immediate loss. There's been a very significant response around that 840 region. So it's, you know, if no one shows up there again, if we're above there and no one shows up again above 840, you know, maybe they're squeeze material if there's any sellers from there. That's all around here. Funding is mainly positive. There's no real, you know, significant change in open interest. I don't know. I haven't heard anything about Link. Watch out for your trade. Yeah, but it's all right. It's not. I'm giving it room to breathe. Like I said, I should have been paying attention because I said if we sell this level and end up trapping sellers below there, I might add some. Not a whole lot of volume into that level. You get the idea though. This level's being sold. It's just not. It's actually leading to something, right? Buyers are not exactly overpowering sellers right now. Selling is actually having an effect on price. Whereas if it was really strong, you'd want to see that the selling continue to get absorbed higher. We would already be expanding, right, if this was that strong. But I'll give this a little bit more breathing room. If anything, now that we've had that spike, so we've had that move below. It's not like it got sold that hard, though. I'll probably just cut it. Yeah, because the S&P is rolling too. Give this its final push. See if we could trap if anything, I could always just get back into this. My stop is 50 points away, so I'm not like worried about being late to that. So we'll give this a second. It's, you know, I've already accounted for that risk, so it's not a big deal if I don't flatten out of this fast enough. I don't usually use hard stops, but because of a stream, it's probably safer that way. All right, guys, questions? I'll give you guys a second. Ooh. Oh, that's important. Okay. This is it's good to pay attention. I wouldn't have been stopped out completely because I only have right now. I only have my stop is, so I have hotkeys, not hotkeys set up for this. I have so I gotta monitor this. I have position sizes that are pre-selected. So my stop right here is 5. And I have another stop, I guess when I clicked again, for a total of 10 BTC that is down at 19,240. How did I end up clicking both? There we go. I could just monitor these now, though. So yeah, I am long right now, 10 BTC, and the level is doing it. I don't want to pull myself out prematurely, and not give this thing a second to fight it out right here, because I mean, what would happen is if this just reclaimed, I'd be longing it again probably, and that's always a bitch. I'm just gonna flatten it out. Fuck it. The S&P looks like it's pushing. Give this 1 second of breathing room. I'll say my line in the sand is 19,346. I'll look over the chat while I'm keeping an eye on this. It's just, I don't know. The S&P is, I'm looking at the S&P right now. It's 3665.50. And it's kind of like retesting just a local level, but there's a big gap between us. Nah, fuck it. Let's just flatten it. Yeah, because the S&P right now is 62. It's strong morning, but yeah, there we go. All right. Now watch it reverse. No, it looks like it's about to accept into. So the idea is, I think if you accept back within here, probably just going to come down and test today's point of control at a minimum. So that's 1920. But I don't know, maybe they're trapping sellers into the level, and I was just a little bit too precise. It's all right. We can get back in if anything. Questions, guys? Yeah, so now the thing is, it's like you see buyers coming in, but they're not able to pull price out of here. So that's usually like in moves. That's one of the ways, like if you see any kind of bounce and you're wondering, hey, is this going to be the recovery bounce? If you see buyers coming in and price is not doing shit, and price is kind of still spending time within local structure where sellers brought us down, any kind of buying that comes in, if it doesn't have any kind of material impact on price, and you just see us moving sideways and still drifting lower, it's the same kind of setup, but inverse to what I'm talking about when I say selling coming in and not pulling us lower. It's like focusing on the activity. Is it doing anything? If it's not doing anything, well, it's a good sign, right? So why didn't you trade the S&P 500 last few days? Well, I haven't traded the ES in a long time now. I haven't set up any kind of prime brokerage account. I mean, I have TD Ameritrade still, but I wouldn't want to execute through there. Besides, the S&P's closed over the weekend. Futures opened last night. Just looking at the chat real quick. I'll use Quantower Dom. So Mr. Nobody. I use Quantowers. I know of another platform coming out with a better Dom. I can't say yet. I've been on the quest to find an all-in-one platform that connects to all the exchanges and has great execution, but crypto is so fragmented that doing that is really tough. You know, I can't trade on Binance, but I monitor Binance flow, so you know, it's like Sierra Chart has Binance execution, but it's useless for me, though I like Sierra better than anyone else because of the customization for the tools. No, I don't trade FX. A lot of alts are probably really good for scalping. I just don't have enough bandwidth to focus on too many things that I'm scalping. I'd rather just focus on trading BTC and ETH intraday, unless there's a really clean setup for alts. With alts, like I'd prefer to trade BTC and ETH intraday and swing alts when opportunities arise. So now that we're testing this level, I always say, like, there's many times when I get out of a trade and I'd be willing to get back in. If, you know, just looking at this consolidation on the top side of the structure, right? It's almost like this could be setting up for a trap where instead of breaking down, this reverses. So my re-entry criteria would be to look at this 13.9, excuse me, this, I'm like dyslexic or something. I think it's because when I stream, all I'm doing is talking to myself basically, and it's easy to just, I don't know, mix my words. This 19,380 level, if we see that we're able to trade back above that and selling's coming in, and we're finally getting some sign of, you know, buyers willing to hold this up, I'd be willing to get re-involved. I don't know. It's just the market's not like very. There's no real compelling sign of strength, even though there's a decent little bounce today. I mean, and what's a decent bounce, right? This is what I'm looking at on a different screen. The S&P, crude oil, the actual S&P, not the E-mini futures, right? Just so I could see the gap this morning. Dollar is off the low right now. Rates are off the low of the day. And risk is off the high. So maybe we have a little fake out on Monday. I don't know. All I know is, like, big picture wise, if this level holds, then I'm going to be way more optimistic. Now, major retests in equities don't just usually happen like in crypto, where you have a huge spring that lasts for a while before maybe retesting in the future. Chances are you're going to chop around the level for some time. So, multi-day, multi-week structure at the low before either breaking down or breaking up. And I think at least locally for the S&P, you have a pretty clean level in this low volume region right around 3760. So 3760 up to 3860. So this would be the first sign we're able to pivot and reclaim a level locally. And then maybe that's your bottoming structure, right? You had this little rounding behavior, stabbed, reclaimed, hold that high time frame structure, now retaking local structure. And all this, ideally, you'd want to see showing up as tailwinds for BTC. Cody, template somewhere you had for Addis. I think I still have it. I'll double check, man. I might have deleted it when I got rid of Addis, but I'll double check. You can message me on Twitter. Slow moving market. I don't want to look at a 1 minute chart. See, it's great when you have, imagine this is a good example, right? When you have a bunch of selling coming in and you don't spend the next few rotations inside of that structure. Ideally, you have a bunch of selling coming in. Ideally, this happened earlier, comes in, and then the market is out of that level very quickly. Instead, this is all just, it's absorption at the high, absorption at the low. It's overall probably going to be a decent trigger as an entire structure. Meaning breaking above, like breaking above here or back below here is probably a good trigger also. For example, yeah, Phemex liquidity has massively improved. But listen, like a lot of, listen, I understand people's hesitancy towards getting involved in any exchange that isn't the major exchange, right? But how do you think any major exchange came about? And crypto is about having many options. I'm not going to sit here and say it's as liquid as Binance. It isn't, right? I can tell you that, yes, it has not ever gone down, right? Maybe it has once or twice like everyone else, but less frequently than everyone else. The execution is phenomenal. Yes, that is partially because there's going to be less people than there are on Binance. But as far as, like, for me, the only thing that I care about, because liquidity is a function of the amount of people that are on the exchange, right? And you got to have people come to the exchange ultimately. You can't just manufacture it, right? You have market makers that are designated. Maybe you hire market makers. You give them, attractive rebates. But beyond all that, like, trusting the people that operate the exchange. Are they transparent? Have you spoken to them? Do you have a feel for them? And that for me has always been one of the major selling points of Phemex. And I don't know if you guys know, but the guy who built Phemex is the same person who built Bybit, so the matching engine. And he wanted to do more with Bybit's matching engine, but they didn't want to prioritize the matching engine, and that's why execution on Phemex is better than on Bybit. So Max is the brains behind that. But he's from Bybit, and Bybit's a phenomenal exchange too. So as far as I'm concerned, Phemex serves Russia. So There's a sign up link for Phemex below if you want to use that. But try out, whatever exchange you're comfortable with. I'm not trying to force anyone to use an exchange. There's like I said, I think up to a $3,300 sign up bonus, or I think there is an exact $3,300 sign up bonus for anybody. I'm not quite sure. You got to double check. If you ever have any issues, you could obviously just hit me up. But I do like this level though. Like I said, I mean, you can see how cleanly it lines up. Get rid of this prior value. These highs, and we are where we are right now. But my point before I switch this and look at the chat was, listen, even this little consolidation is a decent trigger. So either you're back within value down here, attacking those lows again, or at least the VWAP, or a break above, what did I say, 19.6, between 19.5 and 96 is where where things should start picking up if this is really going to be bullish, because that is a little gap. I'd rather get involved at a nicer risk return area, risk reward region, but if I had to buy higher, still might offer a decent setup, like I said, to close more of that structure. This, take these highs, right? Just the idea that this is probably there's a diagonal. Where is that coming from again? It lines up right around 19.6. The idea that this would probably be not that sticky until you got up to that high. Brief consolidation before this breakdown, but gap. So really this 19.750, 19.8 region might be the only place because of these highs, but we'll see. Yeah, I can't help you with the stocks and Russia men or brokers. I mean, Interactive Brokers, TD. Probably Interactive Brokers. Yeah, this is, listen, maybe it bounces because the S&P does, but this is, I would want to see that after this, we're already back in here, seeing this also, but higher up now, rather than buyers coming in and now we're just lower than a prior consolidation. Probably going to wrap it up though, guys. It's we're going on 2 hours, covered some alts. Again, for those of you that are interested in Phemex, I am partners with them. Yes, that is a ref link below. But you do have access to any kind of promotions that they're running. And I think we'll wrap it up. So what I've been doing, just to give you guys some tips on how I use, for example, Edgewonk. What I've been doing is using CoinMarketMan to log all my trades for the day through API, and then taking all that information, plugging it into Edgewonk, because you have to manually do it, which is a pain in the ass, but you could just input your trades. That's fine. But if you want the exact times to get the most out of the software, you have to record all that stuff. ETH, what setting is this? 3, and then ETH is just like a little bit cleaner, holding yesterday's high. Probably trading a little bit more strongly than BTC also. Yeah. So what I was just highlighting is, this is yesterday's high right here. I just want to see this. We do that, I'll probably get re-involved. Trade back above yesterday's high, so maybe this was all just one little trap. All right, guys, have a fantastic day. I will go live again, most likely on Wednesday. Shout out to Phemex. Shout out to my partner, Rager, partner behind Block Roots. And yeah, that's it. Have a fantastic day. Thanks for tuning in. Make sure you hit the like button, hit the subscribe button.